Hey, good morning, everyone, or good afternoon. My name is Jeanmonod. I'm a Regional Vice President of Sales here at Angel Oak Mortgage Solutions. We're going to get started here in about a minute to a minute and a half. We're going to let everyone get logged in, and hope everyone's having a wonderful day. We're going to do a deep dive today into our bank statement program. So it's our most popular program, and I'll introduce our two subject matter experts. And I'm actually really honored that both joined us today. So we'll get started here in about a minute. See how. This is going to be very interactive. We're going to cover the highlights of our bank statement program. We're going to talk to you about what we look on a loan application, the things we like to see and the things we don't like to see, and then talk about credit. You know, what are the trade lines required? We're going to show you a great tool we have for pricing loans, and then we're going to talk a little bit about marketing, which is, you know, really important to everyone out there right now. So give us about another 30 seconds, and we'll get started here. This is going to be recorded. We will get this out to you probably before noon tomorrow. And if we don't get to some of your questions, we will have your account executive reach out to you and get you answers to all of your questions. So, all right, get it going here. All right, let's get started. We're a couple minutes past the top of the hour. Again, my name is Jeanmonod. I'm a Regional Vice President of Sales here at Angel Oak Mortgage Solutions, and I'm honored today to bring a team to you guys. Team Bob and Eric, together they have originated over $1 billion just in bank statement loans. So Bob, please introduce yourself.
Yes, Bob Hutchens here. Eric and I work as a team here for about 10 years now. He's out in the field, sales and marketing, doing the presentations, and I stay here at my command center at an undisclosed underground location with artificial light pumped in. So I don't like being away from my command center too long when I know I got loans coming at me that need attention. And Eric is, he does all the outside work for us, so it works out pretty well for us. So also, Eric, I would like to mention that get to know your local account executive. We have an interactive map on the website where you can find the account executive in your area. If there's no account executive in your area, we have an awesome inside sales team that fills in the gaps where we don't have boots on the ground. They're based out of Miami, and they're inside AEs like me and do an excellent job.
Thank you, Bob. Yeah, and Eric, the other half of the team. Eric, please introduce yourself, please.
Hello, folks. Eric Morgenson. You've heard from Bank Statement Bob. He is the best at structuring a bank statement loan in the business. I'm a little bit of, my background is retail mortgage banking, so I'm obsessed with marketing mortgages to the underserved out there. And what we hope to do today is to teach you a little bit about the unbelievably growth market in bank statement borrowers and how big the market is and how still virtually underserved these borrowers are out there. They have no idea this program exists, and therein lies the opportunity today. John?
Yeah, Eric, very well said. You know, it's really, like you said, Eric, it's what we do is serve the underserved market that isn't served by agency loans. So, but before we get into the highlights of the bank statement program, I want to do a poll here. If you guys could just vote on this poll for everyone who is on this call, who has originated or has not originated a bank statement loan in the last 12 months? And while we're doing this poll, I do want to share a little bit what Eric was talking about, an underserved market. In 2020, new business applications grew by over 24% over 2019. It was the largest increase in new business applications in over 10 years. And in 2021, new business applications grew by 21% over 2020. And last year, it was on par with 2021. So as Eric said, this is the largest segment of the industry right now. So let's look at the poll here. All right, 79% have not originated a bank statement loan in the last 12 months, where almost 21% have. So thank you for being on this call. We have two of the best in the industry that are going to teach you about this program, how to market it, how to close them. And so, Eric, let's talk about, Eric's going to cover the program highlights of our bank statement program.
Okay, folks, what I hope you get from today is we at Angel Oak, we're here to make you money and delight your client. Now, here's the thing with a bank statement loan. They're normally always much bigger loan sizes than full doc loans. Why? You don't see a lot of W-2 wage earners out there buying $1 million, $2, $3, $4, $5 million homes. 100% of the time, they're self-employed and you go bank statement. And all you folks out there, you're paid on basis points. So we're here to not make you good, but we're here to make you great at these simplistic loans. So all we're doing is, instead of going off of their tax returns, and oh, by the way, there's our tax code in America is 70,000 pages. We have a very sophisticated tax code in America. So when it comes time to a borrower qualifying for a loan going full doc, guess what? If they're self-employed, they're writing everything off. So they don't qualify normally. That's where this lane is. So we go to 3 million. We'll go a little past that with compensating factors. We want to see either 12 or 24 months business or personal bank statements. Don't overthink this. You do get a slightly better rate with 24 months versus 12. Why? This is all risk-based pricing. You see, a 2-year look back on somebody's income is less risk than only a 1-year look back. So when originating a bank statement loan, your number one question is, do you own the business 100% yourself? If they do, typically you want to go business bank statement. Why? They don't have a need to pay themselves. They're running all their personal bills through their company, their car expense, anytime they travel, certainly anytime they go to a restaurant, even their DirecTV cable bill, they're running through their business. So you'd want to go business. No, let's say John, Bob, and myself, let's say we're business partners. With that, you'd want to go personal bank statement loans. Why? Because we pay ourselves every month. You see, John and Bob would get awful grumpy if I were writing off all of my personal items through our collective business. So that's typically the lane. So with that said, all of these bank statement loans here at Angel Oak are 30-year fixed. We do have a 40-year IO option. It's interest only for the first 10 years. Then it goes into a 30-year fully AMD loan. Debt to income ratio. Folks, all you do is fully bake a 1003, completed 1003, including if they're renting, what their current monthly rent is, run their credit, and give us either 12 or 24 months bank statements. That's it. We are going to sit back and literally garnish what the borrower's monthly income is based on the bank statements you provided us. Don't overthink this. This is a very simple process. The biggest speed bump for you folks out there that haven't done one of these is you tend to overthink it. Let us do the lifting for you.
Yeah.
Hutch, anything you want to add?
Yes. What Eric's talking about there is figuring out the borrower's purchasing power. You know, maybe full doc, they're eligible for that $600,000 loan, but we calculate their bank statement income and they can get the $1.2 million home that they really want. Who's happy? I'm happy. Your realtor's happy. You're happy. Everybody's happy.
Yeah, Bob, it's funny you say that, and we have a gentleman on the call. His name's on the webinar on the call. Joshua said the light bulb just went off about, you know, that those jumbo loans, and Eric and Bob, we treat jumbo loans. That's all we do basically, are jumbo size loans. I mean, especially, you know, Eric out in California. But just a couple of housekeeping rules. This is being recorded. We will get this out to you before end of day tomorrow. Adriana has a call. How about, you know, Bob? We're going to let you talk about 1003 and credit, but Adriana has a call. What about, personal or business bank statements? Can you do both? What if you have multiple bank statements? Bob, if you want to jump in on that, and then we'll get into what we want the 1003 and the credit report to look like.
With multiple bank statements, that can be allowed in certain situations. If I had 2 accounts, I could make 10 grand look like $1 million just by moving the money around. So if the accounts are all commingled with transfers back and forth, that makes it very complicated. But quite often a business will have 2 separate accounts, maybe one for their online transactions and one for retail, for example, where they're pretty much separate, and it's easy to determine the income on something like that. We really can't combine business and personal statements because there's always money going back and forth. But we make exceptions all the time. As long as it makes sense and we can calculate a good estimate of the income with the cash flow, we'll allow it.
Yeah, so Bob, while you're running hot right now, let's talk about what we like on the 1003, and then let's talk about what we want from a credit perspective, and then we'll dive back into some of the Q&A here.
Yes, I do all the pre-quals for our team, so I've seen just about everything. But we're looking for, like Eric says, a good fully baked 1003. Rental history is important if they're a first-time home buyer. Find out what they're paying for rent and see if they can provide canceled checks or the transaction history. We really don't want a rent-free borrower or someone paying cash on a bank statement loan. It's best to just leave the income blank on the 1003 until we tell you what it is. What we don't want is to see that full doc income still on there that doesn't qualify, so just leave that blank until we give you the income. Very often you have a self-employed borrower with a W-2 spouse, teacher, policeman, whatever. We can absolutely use that W-2 income in addition to the bank statement income. You'll just list that on the 1003 like you normally would, and later you would supply the W-2s and pay stubs for the underwriter. So we can always use the W-2 income or Social Security income. All of that is fine.
Yeah, Bob, I'm going to interrupt you. So David is on this webinar, and that was his question. So David, hopefully, Bob answered your question about using a self-employed borrower along with a W-2 borrower. So yeah, so thank you, Bob, for answering David's question already. And then talk about what we look for on a credit report, Bob, please.
Well, at this time, we're looking for at least a 660 credit score, but honestly, these self-employed borrowers, they almost all have great credit because they're running a business, and they're not going to get their credit all messed up when they're running a business. So our average credit scores on this program are actually quite high. The higher the credit score, the higher LTV they're eligible for, up to 90%. The credit, though, I'm looking for a few trade lines. We're looking for 2 trade lines with 24 months reviewed or 3 with 12 months reviewed. We really don't want to see a bankruptcy within the last 2 years on our bank statement program or a foreclosure or short sale. But it's real easy to qualify from a credit perspective unless they're kind of just starting out and just starting to establish credit.
Yeah, thanks, Bob. And it's really, and Bob mentioned something earlier, 30% of the loans we close here at Angel Oak don't meet our guidelines, right? And that's because, that's because people like Bob and Eric, almost 20 years combined just here at Angel Oak, right? So it comes then knowing the type of loans that Angel Oak likes to close. But it also comes with a complete 1003 with assets. That's how we get, past some of the guidelines, so to speak. So a bunch of questions coming in here. Eric, what about payment shock? Talk a little bit about payment shock. And we just increased.
Sure. So when it comes to a non-qualified mortgage, the Frank-Dodd Act, that passed in 2014, has 8 pillars of non-QM. One of those 8 pillars is known as payment shock. You can't have a borrower that has no housing history, no housing payment whatsoever, turn around and buy a $2 million house and all of a sudden have an $11,000 a month mortgage. you see, we would get raked over the coals, and that would be what is known as an ATR violation, standing for the ability to repay. So the industry likes to see about 250% payment shock. We used to do 350, and recently we've gone as bold as 450% payment shock. That means if somebody's, renting for $2,000 a month rent, we can do a jumbo loan for them here at Angel Oak. We'll go to 450% payment shock. Again, don't get into the weeds on this stuff. We're going to pre-qualify these right up front for you folks. We're going to save you time. Right up front, we're going to do a full credit and income underwrite, often same day if we get it in the morning. And we're going to let you know exactly if this loan or if this bank statement borrower qualifies right up front. Any exceptions we're doing in this pre-qual process right up front. Saves a ton of time, you guys. And how do you get us to pre-qual? Give us 12 or 24 months bank statements, a fully baked 1003, and the credit report. And then go relax and let us get back to you with exactly what that monthly income and that the borrower credit qualifies. Again, we do all that lifting for you right up front.
Yeah, and I know the question usually comes up, but it hasn't come up, and I'll answer it. TBD, we will do a pre-qual on a to-be determined property. So we'll do that all up front. Yes, we calculate that income up front. You heard Eric talk about it. That's the income that's going to be used throughout the underwriting process. It is all done up front. If they're getting exceptions, that exception gets put on that pre-qual that follows that file all the way in through submission to underwriting and closing. So, hey, Bob, talk a lot about expense ratio. Lisa is on this webinar, and she really wants to know how we calculate that expense factor, please.
Certainly. We're going to use the default 50% expense ratio, which is actually pretty generous for most businesses, but we will allow an expense ratio down to a minimum 15%. If it qualifies with the 50% expense ratio, you're done, no further documentation required. When you submit the loan, the underwriter pulls the income figure right from our bank statement team. So that's done. If it doesn't quite work with the 50% ratio, we would allow a lower expense ratio if supported by a CPA expense statement. ABC company has expenses that do not exceed 15% of gross revenue, for example. It can be from a CPA or a tax preparer. The 15% expense ratio is more for the borrower that works from home with no employees and no inventory, but we certainly allow lower expense ratios. There are a few types of businesses where we'll use a 70% expense ratio. These are your high expense businesses like a full service restaurant and bar with a wait staff, convenience store, gas station type of business, new home builders, and certain types of manufacturing firms with over 25 employees. But in most cases, I look at a bunch of these, we do the 50% ratio, the income's more than enough to qualify, and we're done right there. John, one other thing you said, it's important to, when we're calculating the income up front for a TBD property, that's a very important point, because if you have a purchase borrower, you want to get that, make sure they qualify up front. I see it all the time where we get a pre-qual submission because they didn't qualify full doc, but they're already way into escrow and now we're scrambling. You know, you want to get them pre-qualified before they really start to look around, and certainly before they get into contract.
Yeah, Bob, I've been told that's a great point. If you know you are going to be meeting with a self-employed borrower, yeah, get their tax returns, right? But at the same time, get their bank statements. You know, it doesn't cost anything for Angel Oak to do a pre-qual for you. So get their bank statements, and yes, we'll do 12 or 24, but I really recommend getting 24 because Bob, Eric, or any other great account executives across the country will tell you which way we should go. And as Eric mentioned earlier, there's sometimes a little better pricing if we do 24 based on that. But we'll do all that for you up front. We will hold your hand. Last month, we did a webinar with one of the AEs and one of the inside sales AE guys, and he said, you know, jump in the non-QM pool. I will be your lifeguard. And that's what our AEs across the country do. They hold your hand throughout this entire process. So, Eric, someone asked about here, talk about the types of transactions, Eric. You know, we always talk, this is a high purchase, not, bank statements are a high purchase, but talk about refis, cash outs, delayed financing, if you don't mind.
Certainly. So with that said, purchase, cash out, rate and term, primary, secondary home, or non-owner occupied investment property. You can go bank statement, alternative income. Now, let me just point out, what if you have yet to run credit? You don't have a fully baked 1003, and you got this scenario, and you're thinking, huh, I remember those crazy guys from that Angel Oak Bank Statement webinar. I wonder what they think about this. Folks, we love scenarios. Bring it on. Give us a call, text us, email us. If you have a scenario, you haven't spent the time baking a 1003 yet. You certainly haven't run credit, but you're wondering, I got this borrower that's both a W-2 and they've got this side hustle. Can I use both of those incomes? The answer is yes, but it all starts with a scenario. That scenario is the beginning of a big broker check hitting your personal checking account. So bring us your scenarios. We're going to walk you through them, and don't be discouraged if you come to us with like 1, 2, maybe even 3 bank statement scenarios and we can't do it. Every loan that you learn about what we can and can't do makes you that much better as you're out there harvesting all these self-employment loan opportunities, folks. So with that said, and I want to point out, never in the history of mortgage banking in the United States do we have this perfect storm. Here's the storm. Real estate prices have gone right. And guess what? There's more self-employed Americans than there ever has been in the history of America. As Sean pointed out, new business license applications are up 20%. That's crazy, right? Then let's couple it with our 70,000 page tax code, where you can have an American roaming the countryside out there that shows the IRS that he makes, I don't know, $38,000 a year in personal income, documents to the IRS, turns around and buys, I don't know, a $1 or a $2 million home at 90% loan to value, no mortgage insurance whatsoever on these programs, and be able to buy their dream home. Meanwhile, they're documenting $36,000 a year to the IRS. This has never happened before, folks. And why? It's all because of that Frank Dodd ATR regulation. You see, every borrower has a 3-year statute of limitation to sue their lender on their primary or their secondary home for their inability to repay their mortgage. Is this not a great country or what? That's Angel Oak. So we're very disciplined on how we approach the ATR regulation. But here's the thing, folks, nobody knows about these programs. 80% of you guys out there have yet to do one of these. And absolutely, those accountants out there that, guess what? Those accountants, they don't know about these programs. They have to do a 2-year or a 2-day class to maintain their CPA license. They have to go to a quarterly meetings and have a 2-day class. We as NMLS licensed loan officers have to have 8 hours of ongoing education to maintain our license. But these CPAs are not taught ATR. These CPAs are not taught about bank statement loans in America. And guess what blows their mind? You see, who has the database of self-employed borrowers out there that take advantage of our tax code? Your CPA does.
Right.
And that CPA, listen, they can't have it both ways. You can't maximize all your write-offs and lower the tax bill you're going to pay to Uncle Sam and still qualify for a mortgage, can you? Now you can. This is the opportunity that's in front of all of us right now. And here at Angel Oak, we need your help getting the word out on these. So,
Hey, John.
Yeah, go ahead, Bob.
Yeah, just I want to add to that, this program is available to self-employed borrowers, but also for 1099 contractors. And that's very important. And what is the #1 occupation for borrowers that do this bank statement program? It's realtors.
Yeah.
Why do you think that is? It's because they know about the program. Get with your local AE and go on realtor presentations. What happens if you present to 20 realtors and tell them about this program, you're going to get 1 or 2 of them come up to you afterwards for their own personal loan. Happens every time.
Yeah, and just to add to that, and Bob's jumping ahead to marketing, which is the last part that we're going to cover here today. Duran, we'll talk about rates. We'll show you our quick quote tool here in a little while. But the thing, Eric, I went to an industry event the other night, and there was a loan officer, and she was also a CPA. And so she originates sometimes, but mostly she's a CPA. And she had never heard about bank statement loans. So, we're going to talk to you how to market bank statement loans, not just to CPAs, but to realtors and so on down the road. So Bob, and Frank is on this call. He has a specific scenario, Frank. It's kind of regarding, the documentation of rent and how it's paid. And we'll have someone reach out to you directly, Frank. So thank you for being on this call. Julianne is asking, Bob, how do we treat, and this comes back to the 12 or 24 months of bank statement, how do we treat a declining income scenario, Bob?
That's a great question. First of all, the main thing to remember is that the loan must make sense. If it's significantly declining, that's something we're going to look at pretty closely. But maybe it's a seasonal type of business, and maybe we're just at that type of year where we can show that that's normal for this type of business. That's one reason to go with the 24-month option, so that we can see the 2-year history of where it declines at a certain time of year and then bounces back. So it's certainly something we're going to look at if the business is going down significantly. So we're not going to take a 12-month average if the last 6 months have very few deposits. It's got to make sense.
Yeah, let me jump in real quick, John. Folks, what we do is we're going to put on common sense glasses, and we're going to look at every scenario under its own light. What I mean by that is you come to us with a bank statement loan, and it's got declining income falling off the ledge, and they're wanting to max cash out of that property. That's going to give us some concern. Looks like their business is failing, and they're grabbing a lifeline and trying to grab as much equity out of their property as possible. So we're just looking at all of these with common sense. Yeah. If the loan makes sense to you, chances are it's probably going to make sense to us. If it makes no sense to you and you wouldn't do that loan, chances are same with us. We probably wouldn't do that loan either. Just common sense.
Yeah, Eric, and it comes back to the quality of the AE we have here at Angel Oak. I mean, like you mentioned earlier, Eric, we love scenarios, and because of the experience that Bob, Eric, myself, and all the other AEs have here, we know those second, third, fourth, fifth level questions to ask to peel that back, not to say no, but yeah, we have a good loan. As Eric said, this makes sense. This is a common sense loan. We should lend to this borrower. Bob, talk a little bit about why would you go 1099 versus bank statements, and what's kind of, like you said, Bob, you and Eric have closed over $1 billion worth of bank statement loans, so you've probably seen most scenarios out there, although we still get new ones every day. But talk why you would go 1099 versus bank statements, please.
Yeah, the 1099 program, let me clarify. A 1099 borrower is eligible for a regular bank statement loan, but we also offer for that borrower a 1099 program option where they would provide 1 or 2 years 1099s, and then we calculate their year-to-date income. We can get a year-to-date income statement from their employer, such as like a RE/MAX realtor, for example, or we can use bank statements for the 2023 income. So at this time of year, the 1099 program is pretty easy because we're getting 1 or 2 years 1099s, and we just have to calculate the income through February for 2023. When you get later in the year, we get to where we need 10 bank statements for 2023 or a year-to-date income through October or whatever. It gets might as well just do a bank statement loan at that point. But the 1099 program is available for a borrower that has one employer, one 1099. It's not for the gig employee that has 15 different 1099s.
So, thank you, Bob.
Quick, right
That's
there.
a bank
Bob,
statement
why don't
borrower.
you jump into what if they don't have one company, they have 5 different companies? Now what?
Yep. Eric, talk a little bit about, we have a couple questions regarding property types, but if you don't mind, just, 2-unit, talk a little bit about, just the type of properties and stuff like that, please.
Okay, so we're 100% residential lender. We don't do commercial property. We just 100% resi, 1 to 4, and then condos. High-rise condos are fine as well. Now, on these non-agency, non-QM loans that we do, if you have a property that's very unique, I mean, there's no way you're going to get comps in that area that are anywhere close to this subject property. It's very unique. We're going to push back on that. So 100% resi, don't like to see unique properties. Yeah, we'll do log cabins as long as the neighborhood has log cabins in it. So stuff like that. We just want to see it comp out. Any loan amount over $1,500,000, we're going to require 2 appraisals. So if me and Bob see, hey, let's just say the loan is 1.5 million. Guess what we're going to do? We're going to make your loan $1.4,999,000. So $1 off of 1.5. So we only need 1 appraisal. See, we have all sorts of ways to make life simple for you guys. And when you come to us with a scenario, we're going to peel back the onion and try to figure out a way to make your loan work every time. And we're going to exhaust all avenues. If we say no to it, that means we've tried every angle and that loan is just not a fit.
Also, we'll allow certain non-warrantable condos even if it meets our guidelines. There's certain things we don't like pending litigation for construction defects, but we will allow up to 100% investor concentration. So non-warrantable condos are possible here.
And we'll allow 20% single owner concentration, where the industry stops at 10% single owner concentration on condos. So we double that. We have ways of making loans work here, folks.
Yeah, so Bob, answer this question about a CPA letter. When do we require a CPA letter?
Simple is better. I said before, it should say something like ABC company has expenses that do not exceed 30% of gross revenue, period. While you're getting the letter, you can also have them add ABC company has been in business since 2011 and Joe Borrower is 100% owner. So we've knocked out 3 conditions with 1 letter: the ownership verification, how long in business, and the expense ratio.
You guys, I have over 10 examples of CPA letters that if anybody's interested, I can share with you. And again, getting the CPAs to understand that these programs work and that there is the ATR regulation, meaning that their clients are really in the driver's seat to be able to sue the lender for their inability to repay, changes everything. And the paradigm of that CPA's mind is completely changed. And boy, do they ever make the best referral partners. Think about it. Every CPA knows where their self-employed clients' financial bodies are buried. There's a high trust relationship between a CPA and a self-employed individual. And when that CPA says, listen, you got to go to Bob or to John in order to literally get into that house, folks, we're in an extremely emotional business. It's not logical and it's emotional. And I'm telling you, these borrowers are going to crawl across glass in order to get into that house that allows their children to go to a certain school district, get into that house that's in a certain gated community that makes them look kind of fancy, get into that house where this gentleman can have his buddies over for Monday Night Football and look at my view and I've completely made it. Folks, you have very motivated borrowers under these bank statement programs. And again, they're normally bigger loan sizes, and all you folks are paid on basis points. Again, we're here to get you great at these.
Yeah, Eric, you bring up a great point. It's, 80% of you have not originated a bank statement loan in the last 12 months. These borrowers are so tired of being told no that they actually reach out to Angel Oak directly. So they're doing their research, and these loans are getting done. And if you're not going to do it, a loan officer down the street is going to do this loan, and you are in jeopardy of losing your referral source because that loan is going to get closed. So, reach out to Bob did a great job explaining. This is being recorded, just so everyone knows. This is being recorded. We will get this recording out to you before end of day tomorrow. But Bob did a great job explaining what's required on that CPA letter. What their expense ratio is, how long they've been self-employed, and what percentage of ownership are they. Less is more, if you hear what we're saying here. So let's jump back into a couple questions, and then we'll jump into, hey, Eric, are gift funds allowed on these programs?
They are. Gift funds are allowed. We just want to see the borrower having their own chops towards that loan. So we want to see the borrower at least having 5% down payment themselves and the 6 months reserves themselves. The rest can be gift funds.
Yeah, and then thank you, and hopefully, Frank, that answers your question. So just 5% of the borrower's own money in. Talk about reserves, Bob.
Simple, 6 months reserves required. Cash out can be used to cover the reserve requirement. Pretty easy.
Yep.
30-day seasoning in most cases, sometimes 60.
Yeah, but the beautiful thing about that, Bob, Eric, and again, all the great account executives we have here at Angel Oak they'll let you know all that information up front at the pre-qual stage. None of this is going to be submitted to Angel Oak and be underwritten and you not know what's going to be required up front. So that's the great thing about having this done, because we really know how much you cherish, one, not only the borrower's experience, but your referral sources experience, right? And we're going to make sure we take care of that all up front.
Also, John, you say sometimes the borrowers contact Angel Oak directly. That happens quite often. And what do we do with those borrowers? We turn around, find the local AE for that borrower, and they send it to their broker of choice. So another good reason to get to know your local account executive. You can get referrals that way from us.
So yeah, thank you, Bob. So talk a little bit, Bob, about deposits, withdrawals on the bank statement. What are we looking for? And I know each scenario is different, Bob, but just give us some generalities on deposits, please.
Yep, we're really not looking at withdrawals when we're calculating the income. We're looking at the deposits. But if it's if there's something unique or if the income is really tight or something, we're going to look at those ending balances to see if they're just living on the edge. Maybe they have 15 NSFs or overdrafts for the 12-month period. So we're going to look and see, well, at the end of each month, they're using up all their money there. So we allow up to 12 NSFs per 12-month period. But if it's more than that, it's a possible exception. But sometimes like that is when we would look at those ending balances. If it's also any day with multiple NSFs, we count that as just one NSF. They have a bounce check from a customer for accounts receivable and it causes 5 NSFs. We're going to count that as just one. But we don't want the borrower that's consistently overdrawing their account with almost 0 balances at the end of each month. On the deposits, it's very simple. We want deposits that are income based on self-employed business operations. If they're transferring funds in from a line of credit or from savings, or you return a pair of pants to the mall and get a credit, that's not income, and those are going to be backed out. And your account executive gets a detailed spreadsheet showing what was allowed and what was disallowed.
Yeah, and then sometimes there's some back and forth. If you can help us help you with, some of those deposits, we can get those included back. But, I think you could tell between Bob and Eric, one, their passion for this underserved market, and then two, they know how to get deals done. And that's, and as Eric said, we're all paid the same way off of basis points, right? So everyone is motivated to close your loan. We've had some questions here about rates. Let's jump in, Bob. Let's talk about our non-QM quick quote tool, please.
Yes, this is your go-to tool to not only price a loan, but also see what they qualify for. And you can see it's right there. There's also a green box in your account executive's signature. You can click there, but it's right on the website. Most of you are going to select the broker channel from the drop down unless you're a non-delegated correspondent. You can see that John needed no login credentials for this. Anybody can access this. He's going to plug in a typical type of bank statement scenario that we see here.
Yeah, Bob, Bob, you mentioned earlier about these borrowers, and I do want to, you talked about them being really great. I just want to throw out a couple statistics here. Our average borrower on bank statements has almost a 740 score, and our LTV is around in the 70s. So just these are great borrowers.
And look at all the different income types here. We got the 12 or 24 month business or personal. If it's an investment transaction and it doesn't work with the bank statement program, you can see at the bottom, we also have our DSCR option. That's a separate call that we do for the deep dive into that program. But here we're selecting 24 months business bank statements here for this scenario. And you can see the pricing has already popped up. I want to point out that there's two different options here. Business bank statement elite and bank statement. You don't really need to worry about the differences between those. If it qualifies for elite, we're always going to put them there. You can see the rate is quite a bit better on elite. The credit requirements are a little tighter, and it only allows business statements, and it's only for a primary residence. If it falls out of any of those things, then we're going to put them in the regular bank statement program to catch anything that doesn't fall under elite. The regular bank statement program is if they're using personal statements or it's a second home or investment. So 6 5/8 at 80% with a good score, that's not too bad.
Yeah, and Bob, I'm going to put a
statement eligible up to 90%. It shows you there as well. They can do 90% with no MI required.
Yeah, and I think that's huge, Bob. And that's the other thing your AE is going to do. They're going to talk to you about, rates. They're going to talk to you about payment. They're going to coach you and hold your hand, as I mentioned earlier, through this entire process. And I'll put a shameless plug in for next week. There's been a couple of people asking about the debt service coverage ratio program. We're going to do a deep dive next week, same day, same time, Thursday, the 23rd, I believe that is, at noon Central Standard Time, or noon Daylight Savings Time. Sorry. So we're going to do a deep dive similar to what we're doing here today. So, hey, John, Bob, go ahead.
Click the blue box for me to see the rate stack. Once it comes up here, you can click that and you can see your par rate there. 6 5/8 actually pays an eighth, and you can see you can make some lender credits. 6.999 pays 7/8. So you can always click that blue box to see the rate stack there. You can make lender credits on borrower paid or yield spread on if you're set up for lender paid comp. Most brokers are just selecting borrower paid right now to be competitive and keep the rate down. You can also buy down the rate, you see.
Yeah, Bob, you and I have done a great job of people wanting to work with this. So how would they get a pre-qual? Because we emphasize so much about the pre-qual, and it really is. It's all about the pre-qual, the scenario. So Bob, how does someone get you a pre-qual?
Yep. You're right there right now. He's selected the par rate or the closest to it, and you select that as he's doing right there. Click the blue box. This takes you forward to our pre-qual section. Here it's asking to upload a 3.4 file, which you can do if you have it, or just click next to skip that. Doesn't really matter at this point. You can save the 3.4 for the submission. You're going to select your account executive here if you know who they are. And the lines with the red stars, required company, loan officer, et cetera. You fill those in and scroll down. You can see you can either drag and drop your 1003 credit. I don't really need a 1008 because we don't know the income at this point, but you can put it in there if you have it. You can either click in the box and search for it to upload it in there, or you can drag and drop them in there. We also have a business questionnaire that we use. It's just a simple one-page form that just how many employees, how many physical locations, do you work from home, and a brief description of the business. That helps determine the expense ratio. And then you can drag and drop the bank statements in there in PDF format. It's best if you have the statements directly from the bank in PDF. If you have to scan the statements, that's okay. That'll be a larger file, but you can drop them all in there.
And if you already have an appraisal, we do take transferred appraisals as well. We get a lot of these in the 11th hour because for some reason they couldn't go full doc because they had, I don't know, too much depreciation, or there was a fourth company out there with big losses and it blows up. We're experts at that. So we do take transferred appraisals.
Yeah, and John, scroll down just a little more.
Yeah.
There, this is an important, there's a little comment section here. Anything unique you want to let your account executive know, you can pop it right in there. That can really help sometimes if there's just something you want to point out.
Yeah, so again, this is being recorded. We will get this out to you before end of day tomorrow. We had a lot of great questions coming through here. If any questions did not get answered, we will have your account executive reach out to you. And as soon as possible. So Eric, we've gotten, and what you don't need to be approved with Angel Oak to use that quick quote tool. There's no login credentials. But Eric, I know this is where, this is your bread and butter, Eric, about marketing. So let's talk a little bit about the bank statement borrower specifically. And I'm going to pull up a PowerPoint here. Eric, let me know if you can see it, because I love the way you talk about, these borrowers, right? So here's one slide, Eric. Just talk a little bit about, who are bank statement borrowers, Eric?
Okay, so with that said, folks, you deal with real estate agents. Think about that. They're 1099. Their broker of record at the real estate office deposits their commission checks directly into their personal checking account. And every realtor can qualify for a bank statement loan. Think about it. They write everything off. Every time they're driving their car around and go to lunch, they could potentially be taking a future renter, home buyer, or somebody listing their house. They write everything off. And why they're the #1 vocation out of all bank statement loans in America is because they were first exposed to bank statement loans 10 years ago. So they had a longer runway of understanding this. So who qualifies for this? We have 56 million people in America qualify under self-employment. Folks, that is 4 times bigger than the entire VA market.
That's crazy.
And look at from Freedom, and look at these behemoth mortgage companies that do nothing but VA loans. This is 4 times bigger, and nobody's been paying attention. Why? Because you've been tripping over rate and term agency refis for the past 6 years that you didn't need to know about this. But folks, if you folks out there have a not such a great pipeline, here's how to get a pipeline of bigger loan sizes. So anytime you go to a restaurant and you like that restaurant and it's a smaller one, ask the owner, are you a homeowner or do you want to buy a bigger house? They don't know about these. You guys walk out your front door and you're going to stumble over somebody self-employed. Your dry cleaner, holy moly, everybody. There's so many self-employed people out there. And by the way, we do take borrowers that are both W-2 and self-employed on the same loan. Think about it. They're everywhere. So my favorite tactic is it's tax time. You folks out there, if you have an accountant, he'll take your call, right? and ask the accountant, listen, and let them know that you have access to these loans. Let them know, because what are they doing? They're doing taxes for people. What's an accountant's favorite write-off for their clients? The mortgage tax deduction, folks. Now, we're the only country in the world that allows you to write off the interest on your home loan. Can't do it in England, can't do it in Canada, can't do it in Australia, can't do it in Ireland, can't do it in South Africa, can't do it in Germany, can't do it in France. We're the only country. And it is, and if somebody's making a lot of money, what is that accountant saying? Hey, you really need to buy a house. But what's the borrower's option? Having to show more income than the IRS than they really have to in order to buy a house. No longer, folks. They can have it both ways. So reach out to your accountant. We have marketing flyers specifically geared towards CPAs to help you get the word out to them.
Yeah, so Eric, I'm going to interrupt you here 1 second because you're going down that path. So let's show them how they can, and let me know if you can see the screen. So I'm going to go back to the home screen here, and you do need login credentials here. So just so everyone knows, I'm going to log in here, Eric, and take me down. We talk about not only how much our AEs, account executives, are invested in your business, but Angel Oak is a company, how we're invested in helping you grow your business. And we do that with all these marketing materials that are available to you. So Eric, I'll let you lead me through our marketing portal, please.
Folks, it all starts with scenarios. How do you get a scenario? Getting the word out that these programs exist. So John is in our portal. By the way, for a quick, no login, no password, it's all open architect. You need to be an approved broker with us to get access to all of this marketing firepower. You see he's on marketing portal. John, just go down to flyers for me.
Yes, sir.
And if you don't mind picking my favorite flyer, that CPA one, scroll down, look at all the marketing we offer. So John, you want to show them how easy it is to customize a marketing flyer?
Yeah, and Eric, it's just about putting your contact information here with a logo if you want. And guess what happens, Eric, if you fill it out for one flyer? It populates all the flyers in our library that you can use to market to different parts of the economy or different CPAs. We have them in Spanish. We have our debt service coverage ratio flyers in here. High net worth individuals, they're all here, Eric. We've invested so much in you, so 80% of you, hopefully next month, if we do another bank statement deep product dive, hopefully that number is down from 80% to hopefully 70%. So go ahead, Eric, let's talk about some of the other materials we have in our marketing portal.
I just want the folks to know that, folks, it's the law of the harvest. Your disciplined marketing efforts today are going to affect your checking account 90 days from now. Again, consistent, disciplined marketing efforts today is going to affect your income 90 days from now. It's the law of the harvest. So getting the word out means scenarios are going to come your way. With scenarios means approved pre-quals. With approved pre-quals means approved loans and broker checks into your checking account. So now CPAs, my favorite. Second favorite is real estate agents in bank statement loans. You see, everybody can see what I'm holding up here. Okay, it's a roll of Scotch tape. Now, what I'm an advocate of, you see the bank statement flyer? John, click on that bank statement flyer there. That's it. So customize this. All you have to do is just fill in your contact information over here to the left, and it will populate this with your contact information. I'll go to FedEx or somewhere to get 50 of these printed in 4-color. So now you have 50 of these flyers in a folder in your car. And as you're driving around living life, going to the dry cleaners, maybe going to the grocery store, just going to a friend's house, maybe going to play golf, you're going to be passing by real estate offices. What I'm advocating that you do is you keep a roll of this and those flyers in your car. As you're passing a real estate office, you pull into the parking lot. Before you get out of the car, you rid your mind of the liars saying, oh, you're not dressed up enough to go in there, or, oh, they have an in-house lender already, or whatever reason is keeping you from this disciplined action of marketing yourself. You rid out of your mind. Get out of your car, walk right into that real estate office, smile, maybe give your card to any realtor that's in there, and just without saying a word, you go and you tape that business or that bank statement flyer on the refrigerator of the kitchen that those real estate agents use. If it's a really small office, maybe tape it on the cabinet above their coffee bar and watch. You will get calls from real estate agents, whether it be for themselves or for a client that they know that was self-employed but couldn't pass the muster, tried to buy a house before but didn't show enough income. Folks, you're going to get calls. It works. How do I know? I've done it myself. It works. Just do it.
Mm-hmm. Yeah, Eric, great information. What keeps people from being success is the inability to act, and that's great information, Eric. So, Eric, do you want to talk a little bit about maybe some of these social media flyers, or let's talk about that,
Go
Eric.
ahead and click on that, John.
Yep.
So you guys, whether you post a lot or you don't, and you're trying to think of content, the thing about social media, folks, is you got to be consistent. You got to throw something out once a week and just consistently be out there in order for somebody to start getting traction. We have templates. You can see we have three different types of templates, and then we've already written the content that you can cut and paste that and then add your own flair to it. But we've made it really simple for you to post and show them how much we have. We have a couple of months worth of content for you to get you started posting on social media. It's really that simple. Call me and I'll walk you through how simple this is. Next, besides social media, we have other forms of marketing where we have what are known as whiteboard videos. You can download that on your desktop, upload it into your Instagram account, LinkedIn, Facebook, Twitter, whatever medium you want. This doesn't say Angel Oak anywhere on any of this marketing, folks. This is all privately white labeled, or you would simply put your logo and your contact information on these. But these explain these type of non-agency programs, like the bank statement program or the investor cash flow, which is a DSCR, debt service coverage ratio program. Why are these jumbo programs? We have no county loan limits on any of our loan amounts here. That doesn't exist in this non-agency world. So all of this is designed to help you folks get the word out that these programs exist, thus building your pipeline back up and starting to make the kind of money you folks have made over the past 6 years doing rate and term refis. Folks, I'm here to tell you there's plenty of reasons to be optimistic out there, because look at your competitors. They're not doing this. A lot of them are even leaving the industry. We have loan officers out there that are crushing it right now because what? They're hyper-focused on their brand. And what is their brand now? You ask them what they do for a living? I specialize in residential financing for self-employed individuals. That flows right out of their mouth every time. I specialize in residential financing for self-employed individuals. Let it roll off your tongue, practice it a couple of times. Don't say, hey, what do you do? Hey, I'm a loan officer. No, I specialize with self-employed borrowers for luxury home financing. How about that? Folks, we're here to make you money.
That's got me geeked up, Eric. I love the way you said that, man. That is really powerful. And then, Eric, we've talked about it. Bob mentioned it earlier. Also, and again, look at what Angel Oak has done or is going to do for you with all this content to help you market yourself, right? And we have we've talked about realtors. Realtors are almost 10% of the loans we close for self-employed borrowers are 10% are realtors. So as Bob mentioned earlier, you get 20 people in a room, you're probably going to get 2 of their loans. And the beautiful thing about it, we've already got this presentation built for you. So Eric, I know I'm stealing a little bit of your thunder. Talk about how powerful those realtor presentations are that you deliver as a partner with your loan officers.
So we're a national company and we have national AE coverage. If you haven't done a realtor presentation lately, bring in your Angel Oak AE or even myself. We will come and co-present. We don't bring any Angel Oak business cards or anything. What we do want is we want some of your business cards. So when we're done doing your realtor presentation, co-presenting with you, that we're passing out your business cards. And again, if you get us in a room with at least 20 or more realtors, by the time we are done presenting, 1 or 2 of those realtors are going to come up to you wanting one of these loans either for themselves or they have a borrower for you. So you're going to come away from a realtor presentation with a lead. But we will co-present with you if you're uncomfortable. But we already have the PowerPoint presentations all built out for you already. Let us come and help you market to these real estate agents who we give 85% of what they deposit into their personal checking account, use that towards the income towards their own personal loan. And again, another highlight is at Angel Oak here, we give borrowers a 50% profit margin on bank statement loans right off the top. What business runs on 50% profit margins? I don't, maybe drug dealers, I don't know, but that's a very aggressive that right by default, here's a 50%. So you deposit, I don't know, $100,000 on average into your business checking account per month. We're going to give that borrower $50,000 in monthly income. Folks, I'm telling you what, jump in, the water's fine with these bank statement loan programs. And once you start doing a few of them, watch the referral sources come at you.
Yeah, Eric, it's powerful. You know, I'll use Frank, who's asked a lot of great questions here. You know, if we're going out and presenting on Frank's behalf, we're just going to tell them, hey, we're just one of Frank's investors, right? And everything we talk about during that realtor presentation, you know what you're going to do? You're going to go to Frank. You're always going to go to Frank first. We don't say anything about Angel Oak. It's kind of like a little bit of a witness protection program. We don't, no badge, no decal, no cards. We are presenting on Frank's behalf, and that is it. And everything is driven about the loan officer who set up that realtor presentation. So I know we've got a couple minutes past the top of the hour. Bob, anything in closing? Again, this is being recorded. We will get this out to you before end of day tomorrow. If there are some questions here we didn't answer, we will get your account executive to reach out to you very soon. Join us next week for our debt service coverage deep dive next Thursday, the 23rd at noon Central Time. There's also a survey. We asked if you want after this call to take a survey and ask us things we could do better. So Bob, anything in closing, please?
Just that these bank statement loans are easy. Your account executive will hold your hand the whole way until you get to be an expert in it. There's no tax returns, no 4506. The income is calculated up front. They're very simple loans, and we do a whole bunch of them here.
Eric, anything in closing?
We love scenarios. Whether if you got something out there, get in touch with us and let's figure this out. We're going to take you by, we're going to hold your hand through this entire process. Folks, we're here to make you money and to delight your borrowers. That's it.
Yeah. Well, thank you. You know, team Bob and Eric, appreciate you guys taking your time. Everyone on this call, appreciate you taking your time. For those of you who have closed loans with Angel Oak, we really appreciate your business. For those of you who have not, you know, give us a shot. We'll definitely make you happy. So on behalf of everyone here at Angel Oak, have a great afternoon, and we look forward to closing loans for you guys for the rest of the year. Thank you. Appreciate you guys.